Good morning, traders. It's Dale Sargent for Trader Boys. It is Wednesday, June 3rd, 2020. Markets are currently grounding higher at 30.96 in the S&P, up 19.5 points. Trying to reach for that 1% move to the upside. We've got the Nasdaq here lagging behind. It's not showing the strength right here. We're only at 0.1%. Dow is just on a tear, up almost 1% now, and the Russell just leading the way at 1.5. Right. Oil is down the day, and you can see right now it's trying to progress its way to the downside, and gold is also dropping as well. So let's jump over the charts here real quick, short and sweet. What do we got here? We got the S&P 500. We are on a 15-minute time frame, and coming back to the left over here on the 15-minute chart, we are currently coming into this area here of supply, which is actually a reaction of this area here of supply. So we're coming into this area right here on the S&P, and this is going to be an area we can look for a short-term reversal on a 15-minute chart. So 30.99, we're at 30.95 right now. This little sideways movement here with a drop away when we break below that previous low is putting some pressure right now. It's kind of holding the S&P at bay. So we can look at right around this area here to get short the market on the S&P. You can see we come up, almost tagged that area up the top, and looking for the turnaround there. On the Nasdaq, on the Russell, we had the sideways, we had the drop away, we're back into that supply area. Obviously we got a supply just above us here as well. Okay, and Russell is just trying to really push to the upside. It's got a long way to recover in comparison to the S&P and the Nas. So maybe we're looking at this area here for the supply level here. You can see there's selling pressure coming on that. On the Nasdaq, weakness on the Nasdaq. Okay, we've just gone sideways here. There's really no supply in this area. We'd have to go further back, but you can see we got the breakdown coming in here, and there's the selling pressure trying to come back to the top. So I mean, you could look at this. I don't like it, but we did break below the lows here. Okay, we're traced back into here, then look for the short. Okay, so we've reacted off this little demand level here, right there. Now we've got this little demand just below us, right, just a few points below. But you could look for these to join the trend to the upside. What I'm looking for is a couple days down, and I'm not too sure if we're going to get in this market. They just keep grinding higher, We got Apple here. Apple is up into its supply level. I believe Apple's looking to be opening around through 324 at this point, so up 86 cents on the chart there. Right, so 324, so it's just around here. Apple's going to open, so we're still in that supply level there. If Apple was to fall, that would definitely help the case for the S&P and the Nasdaq to fall with it. Right. Here we've got Goldman Sachs. Goldman Sachs has had a big move up. It's coming right back up into this supply level. Right, so it might be giving us an opportunity to re-enter that short position. We had a beautiful short off there the other day. All right, we still have this demand level down in here on Goldman Sachs, but Goldman Sachs is opening at 208. And then we've got gold. Gold is currently sitting in our little demand area down here on the 15-minute time frame. It's had a beautiful move from supply all the way down. On gold, look for the retracement to come back up and see if we can't get gold to retrace for a couple of days to look for a long entry going forward. Right, so there's a couple minutes there, quick snap of the markets in the pre-market. Right, Dale Sargent with the Trader Boys. You should wait to see the content that's currently in production. It is absolutely unbelievable. If you want to be one of the first to have access to that free content, head over to free-tradingeducation.com, subscribe, and as soon as I release that, you will have it in your inbox. It is unbelievable. Have a great trading day. Put the stops in, manage your risk, stay safe.